All right, hello everyone. It is our trades back here with another video. I'm glad you are here, guys. My name is Reese. I'm a criminal defense attorney here in South Texas. If you are facing a criminal action in the state of Texas, specifically South Texas, and you're looking for some legal advice, feel free to contact me or use the comment section below. Guys, with that being said, I am an amateur day trader. This is what this channel is about. Just to be completely upfront and transparent with my YouTube audience, I am not a full-time day trader. I do not hold myself out to be a professional day trader. I'm an attorney. So with that being said, don't think that my income uh, in majority comes from trading. It does not. It comes from my work. Okay, guys. So with that being said, we need to get through a couple of disclaimers as well as a promotion for Apex Trader Funding before we get on to the topic of today's video, which is should I trade FOMC, the Federal Open Market Committee, or should I take that day off? And if I am going to trade the day of FOMC Wednesday or the day before, what are some things that I should look out for? Okay, guys, before we get into that, a couple of disclaimers. Trading involves substantial risk of loss, including your initial capital or more. Do not trade with funds that you cannot afford to lose. This is not financial advice. I am not a financial advisor. Simulated trading simulated trading may not represent real market conditions due to things like illiquidity, slippage, commissions, and fees. Just be aware that your simulated trading is not the same thing as live trading. I do trade live, but many of you are going to trade on prop accounts. Okay, guys. With those disclaimers out of the way, um, I am an Apex Trader Funding affiliate. You can get, I think it's a 71% off coupon code by using the affiliate link in the description box below. If you want to trade using a prop firm, Apex Trader Funding is linked in the link below. That's a way that you can trade without putting in your own capital. Just to be clear, guys, it's totally up to you whether you want to use a prop firm or if you want to use your real funds. As of right now, I just trade my own capital. With that being said, do what you want. If you are going to trade using a prop firm, please use the Apex Trader Funding affiliate link in the description below. Okay, guys, so a couple of things. So the Federal Open Market Committee, what is it? Well, let's go over to our handy dandy AI, which I like to use a lot, guys. I think you should be using Grok or another AI if you're not already. I like Grok a lot. I think that it gives you a good summary of everything, and so I'm going to tell you. Grok in a paragraph or two, this is the prompt. Grok in a paragraph or two, what is the FOMC, which stands for Federal Open Market Committee, and why does it affect markets? The Federal Open Market Committee is the monetary policy-making body of the United States Federal Reserve System, which is like the galactic overlord of America's central banking universe. Sure. Colorful, but sure. Composed of 12 members, 7 from the Board of Governors, and 5 Reserve Bank presidents, with the New York Fed president as a permanent fixture. It meets about 8 times a year to decide the fate of interest rates, money supply, and economic stability. Think of it as a council of economic wizards casting spells on the economy through tools like the federal funds rate, which influences how much banks charge each other for overnight loans. When they tweak this rate, it ripples through the financial cosmos, affecting everything from mortgage rates to stock prices, because cheaper borrowing can boost spending and investment, while higher rates might cool things down. So generally speaking, guys, if the Fed is going to announce a rate cut, the stock market is going to react. Stock market and futures are going to react positively to that. If the Fed's going to announce a rate hike, the market's going to react negatively to that. You can expect the market to go down from that. It's not always the case, but that is generally speaking the case. When the Fed decides to keep rates the same, which they oftentimes will, then that's when you need to look at things like dot plots and what the Fed is projecting to do in the future. Okay, guys. Markets hang on the FOMC's every word because its decisions signal the Fed's view on inflation, employment, and growth, key drivers of economic health. A rate hike might spook investors, fearing slower growth, sending stocks tumbling like a spaceship hitting an asteroid field, while a cut could ignite a rally as businesses and consumers rejoice at cheaper credit. The FOMC's standard and dot plot projections are dissected like alien transmissions as traders bet on future moves. In short, the FOMC wields the power to nudge the economy's trajectory and markets react like hypersensitive droids, amplifying its impact across the financial galaxy. So, Grok, the AI, with some colorful imagery there, but that is basically true. So when the FOMC is going to come out, they come out on Wednesdays at 1:30 p.m. Central or 2:30 p.m. Eastern Standard Time. Jerome Powell starts speaking. You're going to see a lot of volatility at that time. Okay, guys, what are some pitfalls about trading the day before or during the day of FOMC? Again, we're going to use our handy dandy Grok here. Trading the day before or on the day of an FOMC meeting is like navigating an asteroid field in a rickety spaceship. High stakes, unpredictable turbulence, and a decent chance of getting vaporized if you're not careful. Here's some pitfalls to watch out for. First, volatility spikes like a supernova. Markets often get jittery as traders position themselves ahead of the announcement, leading to wild price swings before the FOMC speaks. You might think you've got a solid setup, only to see it obliterated by a sudden rumor or preemptive move. Then, when the actual decision drops, usually at 2 p.m. Eastern Time, followed by the statement and press conference, the market can lurch in any direction. A hawkish surprise, hinting at tighter policy, or dovish shock, easing vibes, can trigger instant reversals, stop loss hunts, or gaps that leave you stranded. Second, overconfidence is a trap. The day before, you might try to, quote, predict the outcome based on economic data or Fed whispers, but the FOMC's tone or forward guidance often defies expectations. Even if you guess the rate move right, the market's reaction might hinge on a single word in the statement like, quote, patience, or a shift in the dot plot, which you cannot foresee. During the meeting day, liquidity can thin out as big players sit on their hands, making it easier to get slippage or stuck in a bad fill. Lastly, emotional whiplash is real. The anticipation builds stress, and the post-announcement chaos, especially with algo-driven flash moves, can tempt you to chase trades, or panic sell. If you're not disciplined, you're basically handing your credits to the house. The takeaway, trading around FOMC is a high-risk game. Unless you've got a Vogon-level risk tolerance and a plan tighter than a black hole, you might be better off watching from the sidelines with the pan-galactic gargle plaster in hand. So again, more colorful language, but that basically is correct. Okay, guys, now I want to go to the chart because today was an FOMC day, and I want to tell you both what some price action that you can expect the day of FOMC, some price action that you can expect the day before FOMC, and I'm going to tell you some challenges that may, if you decide that you're going to trade both the day before an FOMC announcement and the day of FOMC announcement, if you're going to decide to trade, you may need to change your standard sort of protocol for how you are going to trade the market. So, for example, usually I'm a momentum trader. I like to trade in the direction of the current trend, enter in with a market order, set my stop to break even, and just see how far it's going to go. That strategy may not be the optimal entry strategy in an FOMC day. Just putting that out there. Okay, guys, so first I want to talk about the pitfalls of trading the day before. Could be really any large economic announcement, but we're going to talk specifically about FOMC. So, guys, this was Tuesday, the 18th of March, 2025, and I want to show you this is on a 15-minute candle chart. This is the micro S&P 500 or micro ES futures, and what I'm showing you is the day before. I'm showing you the day before the FOMC announcement. And specifically, I'm going to point out this price action right here, which you can see that I'm highlighting it with a rectangle. So guys, if you are trading a momentum system, if you were trading somewhere where you want the market to continue going with trend, this is going to be very nearly impossible price action to profit. This is really when you see that price is doing this, every single candle is overlapping. You're in a tight trading range. I would say it was super tight, but let's be specific. 35-point trading range for the majority of the trading day. Is very difficult to make money in those conditions. As a human trader, high frequency trading algorithms are making all kinds of money in that. But as a human trader, as a trend trader, momentum trader, That's a very difficult environment in which to make money. Okay, so when the market is in that tight 35 point range, it's up and down and it's up and down and it's up and down. What's really making money are high frequency trading algorithms that are catching the bid and ask spread and catching small scalps. As a human trader, it's going to be very difficult to mimic a high frequency trading algorithm unless you're ready to shift from your normal trend following strategy to range trading. The day before FOMC, you're going to see price action like this often. I think that the reason that you're going to see a lot of trading range and indecisive action the day before FOMC pretty consistently is because the FOMC will keep its rate announcement pretty tight. So your banks, your financial institutions are not going to put in real money into the market until after the announcement comes in. So the day before, they're guessing as to which way the market is going to go. They're going to keep the market oftentimes in a very tight range like this the day before FOMC. So if you are going to trade the Tuesday before FOMC Wednesday, you may just need to be prepared to switch from a trend following and a momentum strategy to uh, a trading range strategy, or you may just want to completely sit out that day entirely. Now, coming into FOMC Wednesday today, it's 19th of March, the Federal Reserve had some generally positive comments, and the Federal Reserve kept rates the same. So we did see a move higher in equities today. If we go to the regular trading hours, so at the bottom of the screen, I just moved this over to RTH. We can see that as we came into FOMC, the market went up and it went right back down. Again, I think you're going to get used to seeing a lot of indecisiveness both the day before FOMC and then the day of FOMC before that announcement comes out. You're probably going to see a lot of this trading range up and down sort of behavior, which you can make money off of, but you just need to anticipate that choppy or trading range environment going into a big news catalyst. Because really what's happening is that the large banks and the financial institutions are waiting. They're waiting on that announcement to come out before they drive the market in one direction or another. So they're keeping the market in a consolidated range before really driving it in one direction or another. So that's what we saw before FOMC. Now I will say we had a decent. Speaking about today's price action from Wednesday, the March 19th, which is an FOMC Wednesday. We did see the market initially rally up 48 points as we went into the lunch hour. And then the market came all the way back down, right about to where the market opened during equities open, all the way back down 41 points, right to about equities open. Then at 2 o'clock, that's when the Federal Reserve announced they were going to keep rates the same. We saw a large move up that took us to a new high from the day before. So if you were an ICT trader or if you're a liquidity trader, you can see that we took out the high that we made yesterday. There was some buy side liquidity there. The market then came back down, gave some of those gains back as the market closed. So really the market behaved overall in line with what you would expect for rates staying the same with generally positive comments from the minutes. So the market was very volatile, but it ultimately reflected exactly what happened. So, but if we move to some of our prior days here, let's go on to electronic trading hours. Let's go to Monday. Guys, I'm going to be honest with you. This sort of trading that we had on Sunday and Monday was just a lot easier price action to sort of deal with. And I'm trying to find an arrow. Okay, so what do I mean that this is easier, sort of easier price action? So if we just look at Monday's price action, we had a move higher, small retracement, move higher, retracement, and then a nice move higher at the end of the day. This is just a lot easier price action as a technical or a chart trader, a day trader. It's a lot easier price action on Monday to make money off of and to to get on board with a trend. That's a lot easier price action to work with. Whereas as we can see on Tuesday, price action became a lot more difficult for a trend trader. And then Wednesday, FOMC Wednesday, we again see large move up, large move down, and then a large move up during announcement. So in final analysis, all right, first question, should I be trading FOMC? Um, I'm going to come down with on the day of FOMC. I'm going to come down with the answer of no. You should probably avoid trading Wednesday whenever FOMC comes out. I know you. I know myself. I know that staying away from the market is virtually impossible. But if you are trying to be disciplined and you're really trying to make money, I'm going to be honest with you. I think that as a simple day trader trying to just catch trends, you should probably avoid altogether trading FOMC Wednesday. Now, the day before FOMC, the Tuesday before FOMC, should you be trading the Tuesday before FOMC? Probably not. I'm just going to be honest with you, especially coming into the afternoon session. There's probably about a day and a half there every time that FOMC comes around that if you are really trying to, be disciplined and be as professional as possible about your trading, you should probably avoid the second half of Tuesday and all of Wednesday for FOMC. I'm just going to be honest, that's probably what you should do. Now, if you are not going to do that, let's say you are not going to avoid trading the second half of Tuesday and as well as FOMC, you are going to trade during both of those days. You need to be aware that you're probably going to see different market conditions. You're going to see choppier market conditions, probably not always, but probably coming in on Tuesday, and you're likely to see choppy conditions in Wednesday as well. Now, when Jerome Powell starts speaking, if there's ever a point where you should really quit trading, it's right when he starts talking. The market's going to do really wild and crazy things, and you can lose a lot of money really quickly. So there's ever a point where you really need to cut off your trading, it's during Jerome Powell when he's actually speaking. With that being said, that's just my opinion. If you are going to trade FOMC and the day before FOMC, even though I think that you shouldn't, if you are going to do that, I would expect choppy conditions. I would expect illiquid market conditions, and I would go in with a lot of caution, if that makes sense. Okay, guys, so in this video, we covered should I trade on FOMC, and if I do trade on FOMC, what can I expect? What is the Federal Open Market Committee decision? Why is it so important? We talked a little bit with the AI. We reviewed some charts. And guys, I want to appreciate you for watching this video. Make sure to like, comment, and subscribe, and use the Apex Trader affiliate link in the description box below. Peace.